Welcome back, everybody. If you're new, my name's Nicholas and this is Investing Against the Grain. As you can tell, we're not in our house. We are currently visiting the in-laws. They drove down from Boston down to here to Florida, and they have a house on the beach, so that's where we're currently at right now. We're just hanging out with them for the day, watching the dog and things of that nature. So I thought we'd just hop on real quick to do a quick video because there's a few things I want to talk about that I thought would be very pertinent, especially for Tesla investors. The first thing I want to talk about is this recent video made by Gali from Hyperchange and Holmar's Catalog. I think that's still his name on Twitter. I'll leave a link down below for this video, but it's essentially an hour-long video of Gali and Holmar's going through SF, San Francisco, driving FSD beta, and there's a lot of great commentary talking about what's going on with full self-driving, you know, the good, the bad, the ugly, and where we're going and how things have changed over time. I think as a Tesla investor, this is a must-watch. Okay, they do a great job. They don't cut anything out. There's even a drone footage, and there's even, you know, you call it near miss. You know, there's a few interventions in the actual video, but the point is for you to see the progression of full self-driving. I think this is one of the better videos that we've seen. You know, it's not like a 5 or 10 minute clip. It's actually an hour-long video. So there's a lot of good stuff in that. So that was the first thing I want to talk about. I also want to talk about these continuous downgrades that we keep seeing with Ford and GM. You know, over the last, say, 6 to 8 months, we've seen nothing but upgrades and hype and just hyperbole going on between GM and Ford, and one makes an announcement, the next one has a more over-the-top announcement. One's going to invest $6 billion, another one's going to invest $15 billion, and the rhetoric keeps getting heightened and heightened with regards to what Ford and GM are going to do with electric vehicles. Yet, what we saw with Q4 with GM is that they sold 26 electric vehicles. What we saw with Ford recently is that they've stopped production of the Mustang Mach-E, which is their only electric vehicle in production. And so what we're starting to see now is that a lot of these analysts are kind of coming to the realization that GM and Ford actually have a bigger problem, all right? And the problem is, one, they can't get production going in any meaningful way. Two, they're investing like crazy into this field, right? Whether it's the chemistry, whether it's the batteries, the supply, the innovation, right? Just the software, the ADAS systems, they're putting a lot of money into it, which is a good thing and something you have to do, but keep in mind, they also have companies they have to run, and they have profitability they have to show for shareholders. There's this weird inflection between everything they're doing that they have to do to survive as a company, and yet they also have to keep the actual company going. And these electric vehicles they make now are very low margin, and a lot of them aren't even profitable. I think analysts are really starting to see what's happening here, the fact that they're actually so far behind from companies like a Tesla, and we're also starting to see that, you know, this might cannibalize some of their actual internal combustion engine sales, which, if you think about it, they can't have that because that's their profit engine. Without the profit engine, what are they going to do, right? They're just going to be piling up all this debt. So there's a weird spot here, right? If you look up Osborne effect, you can read more about this, understand this at a deeper level as far as cannibalizing what they currently have for their sales. But it's a very interesting time, and it's fascinating to see how these analysts are starting to change the entire rhetoric and talk and thesis when it comes to GM and Ford. So I want to bring that up. I thought that was very interesting to happen today. Something else that happened. So this morning, before we came over here to the in-laws beach house that they have for a few weeks, we were watching CNBC, as we always do every morning. Make a cup of coffee, we sit down, we watch CNBC. And what was funny was that last night, or yesterday evening, we saw Joe Biden finally give Tesla and Elon their credit, right? The petition, we talked about this in yesterday's episode, the petition was successful. Biden mentioned it. I don't know if Biden was aware that he was going to be reading that because he was reading from a teleprompter. He might have been surprised as he was reading it. But all jokes aside, what was interesting is that this morning, the transportation secretary, Pete Buttigieg, he finally mentions Tesla. He mentioned Tesla and Elon Musk today. And if you recall, about 4 or maybe 6 months ago, whenever he was on CNBC and Andrew and Becky and Joe would ask Pete, the transportation secretary, about Tesla, he would not say the name Tesla. He wouldn't say Elon Musk. It was union, nothing else matters, just unions. And now here we are in February of 2022, coming up on midterm elections. Interesting, right? It's funny how we're seeing all of a sudden Joe Biden and Pete all of a sudden wanting to say Tesla, talking about it. Maybe it was a petition, maybe it has to do with elections coming up, maybe it has to do with all of it. But the point is, he finally mentioned it. And what was fascinating, and you rarely see this with Andrew Ross Sorkin, he actually pressed Pete. He pressed Pete and he asked him, is there a correlation between the following? He mentioned how customers of Tesla, Lucid, Rivian, they tend to have these very glowing reviews of the product, right? They tend to be very, very high praising of the experience and the product itself, yet with GM and Ford electric vehicles, it's kind of the exact opposite, right? And so what Andrew asked Pete was, is there any correlation with the fact that GM and Ford uses union workers, yet Rivian, Lucid, and Tesla don't, right? Is there something going on there with the user experience and why this is happening? And Pete did the right thing, okay? Again, I'm not a fan of his as far as transportation secretary, especially since I spent a lot of my career in that field. Did think he answered the question correctly. He said, I'm not going to pit companies against each other. I'm not going to say what one should do or what shouldn't one do, but competition's healthy. And, he essentially sidelined, and he talked about more union stuff. But I thought that, it's great to start to see this entire administration open up, talk about Tesla, talk about Elon, and hopefully this means there's more good stuff to come through. Pete also mentioned how it may not pass as the Build Back Better plan, but we will probably see parts of the Build Back Better plan pass, and I think the most notable part of that is the electric vehicle subsidies and credits. I will fact check him on one point though. He mentioned on there that even Tesla was beneficiary of credits and things of that nature from the government, and that's why they were successful. It's like, okay, take a step back here. Every company has all these credits available up to X amount of vehicles, and they can all still use them. Tesla has been out of those credits. GM's been out of those credits. Ford still has them. Stellantis still has them. So anybody can still use those credits. And as far as any loans or anything that Tesla got from the government, not only did Tesla pay back that loan ahead of schedule, they paid a penalty for paying it back ahead of schedule, and they paid interest on it. Okay, so to sit there and act like Tesla is nothing but a beneficiary of handouts from the government, like that's ridiculous. Okay, so what else do I have here? I also want to talk about inflation. Right now, we have a CPI report that should come out tomorrow. Okay, tomorrow's Thursday. It should come out around 8:30 a.m. Right now, people are anticipating anywhere from between 7.2 and 7.3%. Right? And this would be a 40-year historic high. We've talked about this. If there's a chance where it remains flat month over month or even goes down, I think we're going to start to see a rally in the stock market. I think it's going to give the Fed a reason to continue to do their rate hikes and tightening as they are, but it will potentially mean that all the rate hikes we're going to see moving forward have been baked in. Now, to add to that, we saw Bostic, I think he's the Georgia Fed president, head chair, I don't know. But Bostic was on CNBC this morning, and what he was saying is that he thinks that there should probably be 3, maybe 4 rate hikes this year, and that he also talked about when he's mentioning these rate hikes, he's talking about a 25 basis points or a 0.25% rate increase each time. So I think that gives a lot of insight into what's going on. We've seen a lot of these Fed officials come out and sound more bullish lately, or dovish, I guess you could say. And I think it's because we're starting to maybe see inflation taper out and maybe peak. So a lot of good stuff there. I'll leave this on one final note. I guess I could throw that down. Whenever I invest, and I've always done this, and it's been true with all of my real big winners. And I tend to look at where are people flocking to and where's the real noise and enthusiasm behind. I'll give you an example. I remember, and even today, right? If you ever go to any mall or anywhere where there's an Apple store, there's a line to get into an Apple store, right? And so when you look at something like that, it's like, okay, there's momentum behind that. There's something going on there, right? I mean, people are willing to stand in line to get into a store where the cheapest product in there is probably $1,000. That tells you something. Right? I used to invest in Starbucks. I felt the same way with Starbucks. Right? You can't go to a single airport and not see a line outside of Starbucks, even though there will be 3 or 4 other coffee shops empty with nobody there. You see the same thing with Tesla, right? You go to any mall or any place where there's a Tesla showroom, and again, it's the same thing. There's a line, right? There's so many people there. Everyone wants to see the products. And so I like to try and take what I see out in the world and distill that and use that whenever I invest. And so when it comes to inflation and supply chains, and this is just so anecdotal that, you know, it probably means nothing, but it is something I've noticed, so I thought I'd bring it up here. Chipotle. We go to Chipotle pretty frequently. And for quite some time now, in any Chipotle we've gone to, they've been out of lids. Lids, right? So you can't take it to go. And we always take our Chipotle to go. So instead what they've been doing is they've been getting sheets of tinfoil and they just wrap it up and they give it to you and you go on your way. Well, today, I noticed, I went to a different Chipotle that, you know, I'm here on the beach. I went to a different Chipotle and I noticed they had lids. So I asked the gentleman who was making my bowl, I said, hey, did you guys just get lids or have you had lids all along? And what he told me was, oh no, we've had a raw material shortage for so long. We just got lids and it seems like we were gonna have lids moving forward. And to me, I thought that was a very interesting statement to hear from him because this is just Chipotle. I'm talking about lids for a burrito bowl, okay? So, you know, take this with a huge grain of salt, but we've heard Tesla, we've heard Apple, we've heard Microsoft, we've heard a lot of these companies talk about supply chains starting to lighten up. So I think this is, you know, a very small anecdotal metric to use, but I do think that, you know, if you start noticing these things in your everyday life, not only can this be a good way for you to find a good investment, but it might be a good way for you to understand where we are with the supply chain and what's going on with inflation. That's all I want to do. I want to jump on here, just, you know, make a video, say hi to all of you guys, tell you a little bit what's going on with our life. Again, we're out here on the beach. It's about 4 or 5 miles away from our house. We're here with the in-laws, just enjoying, you know, great weather here. It's, you know, mid 60s today. Clear skies, beautiful day. So hopefully you guys enjoy the rest of your week. I know I will. Keep an eye out tomorrow morning for that CPI reading. We'll see what happens. You know, everybody's gonna be holding their breath to see what the market does. But until then, thank you guys for watching, especially if you stuck to the end. I love you all. Peace.